Okay, welcome to Swara Media. Today we're going to be talking about the numbers. Numbers. That's a crazy thing for everyone. Whether it is a first grader or second grader, until you be a multimillionaire, you cannot escape from numbers. One plus one might be simple, but 1 million plus 1 million minus 500K. It's again seems to be simple, but for a layman, but for a business owner, it means a lot. So, and again, when the taxation comes, everything is under the radar. You cannot even miss you cannot even miss a small decimal. So today, the next few minutes, we're going to be talking about the numbers and how the numbers will play a critical role in our life. So these numbers, makes a layman, common man into multimillionaire. A multimillionaire can go wrong and he can go, he can be on the street. So anything can happen with the numbers. A life-changing part. So it seems to be a very simple, straightforward maths, but it has a lot of equations in the background. So today we have Daryl with us. He's been the numbers is, I mean, all his brain has been with numbers. I think it's more than 3 or 4 decades he's been tapping with the numbers and taxations. He's such a great, great with all the taxations and advisory for all the small businesses and high level business communities and self individuals, on the taxations and the business consultations and advocacy. So we are happy to introduce Daryl Patrick to Swara Media. This is our first live show. It's going to be coming, and today we're going to be talking about 2020, how 2020 came in. It has two zeros, but at the same time it has two twos. How are you going to see the two twos and two zeros? If you want to play with the zeros, you're going to be on the down, and if you want to play with twos, and it's going to be on the on the good bigger side. So I want to introduce Daryl Patrick. Daryl, welcome to Swara Media. Namaste.
Thank you, Raj. I'm glad to be a part of this. Thank you.
Thank you. Thank you. So, we want a little bit, can you brief us a little bit about your introduction, so for just probably a minute. I don't mean to take all your 40 years of experience into a small words, but a one-liner or two-liners so that the listeners can connect, where, which form you are, where are you based out, it makes well sense if you say that.
Absolutely. Thank you, Raj. Again, my name is Daryl Petrick, and I am a certified public accountant, CPA, with the firm called Bowman and Company. We are headquartered in Stockton, here in California. I have been a part of this firm since 1987. I attended Sac State and graduated and worked for a national accounting firm in Sacramento for 4 years, and I have been here ever since then. So it's been a great opportunity. We've got a company that has about 75 employees currently, and we are handling tax and accounting and auditing matters for our primarily business clients, but also individuals, high net worth individuals, investors, people who are trying to go forward in this world. That's our target base. We also work with nonprofit organizations, family-owned businesses, housing, real estate owners. These are the people that we specialize in. So that's the experience that I bring, primarily in taxation, but also in accounting. We can talk about that, but looking forward to sharing some of my thoughts with you and your audience.
Wonderful, wonderful, Daryl. So it means like you are covering all 360-degree views of, and every individual, whether you are a single, family-owned, or business owned, or small businesses, or corporate business, or non-profit organization, anything, you help us out. So that's wonderful.
Correct.
So audience, there you are, So now you got accreditation, right? Again, Swara Media is not to impress anyone. We are here to impact the people's lives. So we want to come forward with the right information, with the right tools and right technologies and the right people, so we can connect the dots. So that's our primary motto of establishing Swara, and knowledge sharing is our primary focus. With that said, thanks for accepting our invite and be here with us, Daryl. And I know it's a pretty short notice, and you're taking time on your busy and holiday time. I sincerely appreciate that. Thank you very much. And with that,
You're welcome.
cheers of coffee, and then we'll start the show.
Coffee. Yes. Thank you.
Okay, so so 2020. I've been thinking about 2020 from my childhood. So we always say that 2020 is a magic number. Vision for 2020. So you should vision either. I mean, back in time in India, from 20, I mean from millennium year, like which is 2000. So there is always a short term and long term plans, right? So vision, look for vision for 2020. That's what I've been thought about from a long time. So 2020, there are a lot of thoughts and visions that we had, but unfortunately the last 2019 December onwards, the things are a little, I mean, there's a lot of drama and there are a lot of emotions, and there are a lot of things were impacted. So before we go into the depths of financials and accountings, I would like to ask you as a common man, how are you seeing 2020? Because it is a mixture of 20. I mean, it's a mix of emotions, and I mean, particularly even with finances, it is a mixture. So on one hand, we are seeing the highest number of unemployments, and so the GDP kind of heavily impacted. On the other hand, the tech stock market has been high rocked all the time, right? Whether you see Nasdaq or S&P, right? So that's been on the high, I mean, top notch, and there are people who gained multi-millennials, I can say that, are probably very good. I mean, they made a good money on the stock markets. On the other hand, there are people who are suffering to get regular payments on the day-to-day job. So how do you equate that? On the other hand, on the third equation is the equity prices. Let's say the housing values were kind of spiked up, and the rate of interest was kind of down. The best or the least, I mean, the low level of interest rates been, I mean, hit in in the market ever since. So how do you see that? There are three equations all the time, right? So, housing market spiked up, and the economy, I mean, unemployment is kind of low all the time in low numbers. And now, I mean, I know it's picking up now, but whereas the stock market has kind of raised. So it's a kind of a wave. How do you see that?
Well, I think that as an investor, it is important to remember that time in the market is more important than timing the market. So in any investment that you make, if it's housing, I believe, if you're buying a house for your own self, that's a solid investment. You want to make sure you're in a good neighborhood. There are plenty of people, real estate people, who will help you with that. There have been some interesting developments with real estate because of the COVID situation, where rents in major metropolitan areas, San Francisco, New York, are falling. Commercial office buildings are empty, and people are negotiating commercial leases. So this is a difficult time to be a commercial space landlord. People are moving out of the Bay Area into the Central Valley where I live. And so prices here are actually very high, whereas prices in San Francisco might be lower, especially in smaller spaces. People are seeing this as an opportunity, like, why am I living in the city when I can have, more property, more, I have many clients who have come and they say, I need to get out of town, even a small city where I live in Lodi. People are getting out of town and moving into the country. They want acreage. They want to put their, if you're going to be sequestered in your house, you would like to have 5 acres if you can, or cherry trees, or vineyard, or something like this. So there's a lot of property changes that are taking place in the Lake Tahoe area. I know of, the property market is very hot up there too, because when people can't travel, they are looking to, have a place that they can go and know that it is safe. It's maybe not safe to stay in a hotel room, people think. I don't want to go and sleep in somebody else's bed. I'll have my own bed and my own property in Lake Tahoe. or at the beach or someplace like this. So property is one item. The stock market, I think, it's a method that allows people to invest in business. And if you think of investing in business as a broad context, it is a very important part of people's financial health. If you have a IRA, a 401k with your work, or if you have money that is left over at the end of the year, very many people come and they would like to set up an account at a brokerage firm and own parts of other people's businesses. So what we have observed over many, many, many years is that owning pieces of the stock market, given enough time, 10, 20, 30 years, those are really important assets to own. So, given enough time, there's not, if you were to say, Daryl, what stock would I buy today that when I want to sell it in 1 month, what is the best stock to buy? I don't have an answer for that. But if you were to say, if I were to invest in the stock market and know that I was going to hold it and not sell for 30 years, I would say that is outstanding, and you can do that pretty safely. And so we recommend that people get diversified, not just load up in one stock, Coca-Cola, AT&T. Companies go out of business. People talk about the Dow Jones, but many of the companies of the Dow Jones from 50 years ago are completely out of business right now. Kodak, things like that were very popular corporations back in the time are gone. So you buy the entire, you buy an index fund or something like this. Mutual funds, they help you to invest little bits of money in a lot of things. And if you hold on to that, I think it's going to be very good. The other thing that you mentioned was interest rates and bonds. If you are a lender, okay, when you buy bonds in the stock market, in the bond market, you are a lender to somebody else who is taking out a loan, whether it's a business or an individual. The returns on those are less. They are not going to be exceptional returns because the risk is less, whereas the risk of being in stocks is greater, but time has a way of smoothing that all out. So interest rates are low. People are borrowing money because it's perceived as a good opportunity. And so we're seeing a lot of activity in that side of the market.
Sorry. That's a very good summary. You covered all the 3 points, with respect to both bonds, stocks, and, for a long-term perspective. But, as you said, so there is let's say if I'm looking for 30 years or 40 years of investment, right? So, as we have seen, the trends have been changed, and, there are a lot of, the systematical, the systematical changes were happening on the ground. So let's say, again, the Nokia is one of the, the strong telephone vendor, right? And the mobile vendor. But, right now, so the kind of speculations and how it is going, Apple is spiked up. So, if I diversify into the, let's say, even in the technology aspects of it, but but for the 30 years down the line, right, so they may be exist or not. So do you think a consistent monitoring and, game change would eventually better, for the security and the aspects? Is that right?
Oh yeah, we recommend that, part of, there's an important question. Anytime you buy an individual stock, you have to decide when to buy it. Are you buying it at the right price? When is the right price? Well, let's pretend that it's the right price as today, but then you also have to know when it is time to sell. Is it, the right time to sell? And so if you go to a party and people are talking about their stocks, you will invariably hear that somebody says, oh yeah, I bought Amazon when it was very low, or Apple, when I bought Apple, when it was very many years ago, and now I have a huge gain. But how do you sell something like that you have a huge gain? Then you have to figure out on the taxes and things like this. So it's often easier to buy a mutual fund than it would be to buy an individual stock, because the mutual fund, they're going to buy shares in, especially if they're managed, there's a person that you hire as a investment manager to decide when it's time to buy something and when it's time to sell something. And so, that's one of the investment tips that we often share with people is, but it makes it easier. It's less fun to talk about. You can't go to a party and talk about, well, I have my mutual funds and it went up, 6 cents, but that could be a very substantial gain. So there's plenty of opportunity for investment success if you are patient, you're diversified. It might not be very romantic or something like this, but it's effective in the long time. So that's what you really want to do. We try to teach people to build wealth, and that's how you build wealth, one little chip at a time.
Right, absolutely. So I think on this note, I would just want to drop a note to the team. Whoever is watching it, if you want more details about it, so there is Darrell's email is going to be on the bottom of this link. So you can write him an email for further details about if you want to talk about wealth and investment plans. He's always open to us. So want to move to the next segment, Darrell. The next segment is on taxation. So now, as we know, in here, it's from Jan to December 31st. So now we're already at December second week, right? So how are we, so let's say if I need to get prepared for the taxes, again, as you know, so there are a lot of things happen in this year. So if I have to prep for the taxes, do you have any recommendations? I know, I think there is not, from the last year to this year, there is not really a big change in terms of the slabs. There are still, the same slabs as last year, right? But yes, there are a lot of people who got the PPPs, and so there are a lot of people who might got an unemployment benefits or other benefits. So how do you think, or what do you think? So if for 2020 preparations, so just to keep it straight and seam, again, that's going to be depend on each and every individual perspective. So do you recommend to have any checklist that they need to prepare with, just to keep it safe, easy, as the year end is coming, it's just to be prepared for their small and family businesses and their, individual filings. Is it something that you can advise?
Yes, I want to talk about that. These are good points. You mentioned a couple of them. So during 2019, most people are comfortable. They understand, how the taxes work if you have a job. If you have a job, they take money out of your check. If you have a business, maybe you have to pay taxes at the end of the year, or you make quarterly estimated tax payments. People who have a business understand that. And then if you're an investor in the stock market, maybe you have a capital gain, and you know that if you sold your Apple stock at a large gain, you have to pay tax on that. But what about some of these other types of income? What is an economic stimulus check? If you got $1,200 this year, is that taxable? No, it is not. That is good news. So economic stimulus payments that the Treasury Department sent out, those are tax-free money to you. What about if you're unemployment? Okay, if you had to go on unemployment, is that taxable? Yes, it is. That is a very little understood factor. You're going to get a 1099 at the end of the year, just like you get a W-2 at the end of the year that says this person was unemployed and they received benefits in the amount of $15,000 or something like this. If you get a statement like that, you're going to have to pick it up on your tax return. If you forget, the IRS gets a statement as well, and so they know that that you got a statement and said that you were supposed to report $15,000. This is going to come as a very bitter pill for a lot of people because they were not expecting to pay tax on this money. They needed all of the money when they got it. They needed it to pay their rent, to pay their mortgage, to buy their groceries. Now the money, and you get a notification at the end of the year, maybe you owe, 10 or 15% of your money as taxes. That's going to be a very bitter pill, especially if you got back to work and were making money again after a few months. If your business or if your company where you used to work, you were laid off for 3 months, you declare unemployment, you collect unemployment for 3 months, then you go back to work and you make just as much money as you ever did. This money sits on top of all the W-2 and all the wages that you otherwise had, and you have to pay tax at the higher bracket. So it's it's something that's going to be a problem, and I'm expecting to have a lot of people in our world who are going to be upset about this, and they say, how come nobody told us? Well, I'm telling you now. So be prepared for it and know that there is a potential tax bill out there. Businesses, I want to talk about PPP, because this is another factor. The Paycheck Protection Program loan was a gift from the Treasury. So they said, guess what? We're going to give you a loan to help you pay your payroll. We want to not put people on unemployment. We want you to keep your employees employed. And so there was a kind of a calculation that you had to work out, and you would go to your bank and they would give you a loan amount for, I've known of people who have borrowed, $500 all the way up to $5 million. It's a huge amount of money that has been loaned out. And so these are regular loans from banks. So the bank lent its own money. I know bankers who have said, this is a loan in our portfolio. Then at the end of you had to qualify for the loan. Then you have to turn in certain paperwork to show that you spent the money as it was supposed to be spent, and the bank will then send that information into the government, and the bank will get a check from the Treasury and say, this loan is forgiven. These people don't owe you this money back. Mm-hmm. So that's the goal, is to get your PPP loan forgiven and not have it owed anymore. If you wind up not having spent as much money as you needed to, then you still would owe the bank, and there is a payment period for that. But the question is, what is the character of that money? Is that taxable or not? And it was very interesting and very and a very big problem. And currently, even as of today, we are in a big argument about what is to happen with this. So if your business got $150,000 as a PPP loan, is that income to you when the loan is forgiven? Because normally when a person has a loan that is forgiven, that is considered income, just like you had sales or something else. Loan forgiveness, IRS taxes as income. In the PPP legislation, the Congress wrote into the law that said, don't worry, this is non-taxable income when it is forgiven. But the IRS, which is another branch of the government, wrote in its ruling, notwithstanding what the Congress thinks, we believe not that the income is taxable, but that the expenses that you paid with the income are not deductible, which basically it's the same thing. So if I took, $500 and I pay an employee $500 for that, the loan is not taxable, but the money that I spent in wages is not deductible. They are saying, and so the IRS and the Congress are currently in a dispute over whether these funds are going to be taxed. There is legislation right now as we speak to try to correct this problem and say, hey, that was not our intent. We don't want to punish businesses who took out a loan of $150,000. If you have to pay tax of $50,000 on $150,000, that's like you didn't get the money at all. So how are we helping our businesses? So this is what is happening even now as we speak. We're going to have an answer, but right now the answer is, that it's not a good answer. We have a tax problem. So we're hoping, we've got our fingers crossed that we're going to have a better tax result. So that's my little soapbox speech. We're writing our letters to Congress right now, telling our congressman, please pass the bill that allows these proceeds to be tax-free, so business owners don't have to pay tax on the money that you promised us was not taxable.
So, but do you think that how about the timeline? So it's already December, and if the government, if the Congress didn't pass the bill by end of the year, do the business owners need to be prepared for paying the taxes, and would that be retrofitted down the line?
you should in your head you should plan to pay the tax, and
Okay.
then right now, and then because we're gonna know within 2 or 3 months at the maximum. We will have an answer by the time anybody has to file their taxes. We will have the answer. So by February, March, we will know the answer for sure. But right now, as a conservative person, I have to tell you, plan to pay the tax, and then if you don't owe it, then it's a blessing for you. So then you can just have the money.
Right, right. And I mean, I would like to touch upon another small businesses area. So, as I have seen everybody was seeing, right? So there are a lot of small businesses and family-owned businesses who have been who have been in the communities are at the verge of shutdown now. So, maybe it could be restaurants, or maybe it could be classy businesses, right? The legacy business structures that they're following. Maybe because of the multi dimensions, right? Many factors. So the business, they're not able to sustain with the rents, etc. So what kind of support is the IRS or probably the government can give can support them in the financial aspects of it?
It's tough. Yeah, going through bankruptcy is a tough problem to have to go through. So closing your business and declaring bankruptcy is not unexpected right now. I think we've seen a lot of our, like restaurants, for example. I've been frequenting some restaurants that just can't open anymore. They're just, the government says you have to eat outside. Then they say, well, we're not even so happy for you to eat outside. You should just do to-go orders and how do you make a business from just that sort of thing?
Right.
So it's very difficult. There's a lot of pressure right now to the government to give these people a little bit of a handout. And so right now, again, there is talk in Congress, even over this weekend, that they are trying to get new PPP loans again, with a little bit different terms, especially for people who have lost a lot of business during this time period. If your sales were high and now they're low, you may be eligible to get a new PPP loan, eligible for forgiveness again. So we're hopeful that the government will, part of the entire plan of the Washington and in Sacramento for people in California is, we want to help our businesses because they know we're making possibly permanent changes in the way that people operate, and it's going to be terrible for them to have to try to set something back up again, or people are going to have to look for jobs, and there's unemployment, and all of these things are permanent problems. And with the kids not being in school, how am I supposed to have a business if my kids don't have any place to go? It's not safe for them to be home by themselves. Right. So all of these things are government problems, that they have brought upon the people.
Yeah. So that's right. So how about on the healthcare expenses wise? So, now particularly this 2020, as everybody know, the healthcare expenses might have, definitely spiked up, but, the tax rules would have, has a limitation with respect to their taxable credits, right? So do you think, would there be any additional leverage can happen, in this particular financial pandemic time?
So the way that medical expenses are treated for most people, it is not deductible for you to go when you go and you have to do your co-pays at the doctor. If you have even a significant medical expense, usually your insurance pays most of that, and you don't wind up having to pay as much. My own son had a serious auto accident, and he has medical bills this year that are significant. And his insurance is going to limit the amount of money, the maximum expense of him, to $8,000. So can you write off if you have to spend $8,000 at a hospital or something like that? Can you have a deduction for that? Probably not. It's going to be very difficult for him to get a write-off for that. What the government does permit, and this is an interesting thing that developed many years ago, is that there is a deduction that you get for having insurance. So most people who are working in a job, if the company gives an employee an insurance benefit, that is a write-off for the company. So you get, and if that insurance then goes on to pay those doctor bills, it kind of works out that way that the insurance component is going to be the deduction portion, but not the copay typically. So for people who are in small business, if you have your own business, maybe you have Swara Media as a business, for example. If you were to go out and buy an insurance policy, you can likely get a write-off for that, assuming your business is profitable. Now, I want to caution on one thing. Under the Affordable Care Act, what we call Obamacare, there was a provision a few years ago that said everybody in the United States had to have insurance. Otherwise, there was a penalty. You had to pay a special tax. And I have clients who didn't have insurance for whatever reason, and they had to pay a tax. That rule has been repealed. So now for federal purposes, you don't have to have insurance anymore. You can just show up at the hospital and they have to take care of you on a limited basis. However, for California, you do have to have insurance. California decided that in 2020, you are required to have medical insurance. And so if you don't have medical insurance, you have to show them a certificate. And if you have to declare it on your tax return, I didn't have insurance this year, and then you'll have to pay a penalty also, just like you did a few years ago. So that's brand new.
Oh, okay. So now the administration is kind of changing, right? So 2021, so the administration is going to be changing, are there any anticipations that, so the things will change in 2021, particularly with the taxation rules and tax brackets?
Yeah. So there's a big day you have to circle on your calendar, and that is January 5th. What will we know on January 5th? The Senate race in Georgia is taking place, where 2 senators are going to be elected. If 2 Democrats get elected to the Senate in Georgia, that means that the Democrats have all the branches of government, and they can pass legislation that would significantly change taxes. President-elect Biden has said, I plan to put through legislation that is going to significantly raise taxes. Okay. If the Senate does not go to the Democrats, but the Republicans hold the seats that they currently have, it is very difficult for them to pass any tax legislation. But the thing about the taxes is that if it happens January 5th that those Democrats take those chairs, it is entirely possible, and I would tell you it is entirely likely, that the tax bill, even though it's not done until June or something like that, when they decide to raise taxes, they will make it retroactive all the way back to January 1st. So all of 2021 could be a very high tax year for people who are successful business owners. They feel like they need to really get after people who've gotten a good benefit on their taxes over the past few years to kind of pay for a lot of stuff that they're spending money on right now.
Mm-hmm. Okay. So yeah, that's, I think, so basically for 2021, so they need to be better prepared with their, the spending money or reinvestments or something like that. So probably that should be the best way to spread and, to expand their businesses and to keep the taxes, to keep the taxes low. Right.
We always recommend, before the end of the year, in December, right now, we're in December, if you have a business and you've made a lot of money in your business this year, if you've been blessed like that, you should use your money to reinvest and buy equipment for your business. If you need new machinery or something like that, new copy machines. Take possession of those, pay for them. Even if you charge it on a Visa or American Express, you can, if you go to, and buy your expensive asset purchases by the end of December, on December 31st, you could go into the office supply store and buy $5,000 worth of office supplies and get a write-off for it, even if you put it on your Visa card or your American Express. So that's a good write-off opportunity for people who have a business.
Okay, so that's what I'm coming to that, that's my final topic that I want to bring. So 2020 closure. So, again, as we talk about the checklist and what should we do and all. So now we know you raised another topic in terms of, the saving taxation for, by doing the reinvestments, etc. So I think the same applicable for the individuals as well, right? So, looking at their W-2s or, so the last paychecks, in terms of looking at their brackets, the way they fall in, and probably some of the things that they can plan in the next 15-20 days, probably they might be on the little safer side. Would you agree with that?
Harder for people who get a W-2 to affect their taxes. There's just not a lot of opportunities for people to do tax saving as an individual. Charitable contributions. This year we have charitable contributions available for people who itemize their deductions and for people who do not itemize their deductions. Okay. So you will need to keep track of money you spend to charity. If you're donating money, to a civic organization, they should give you a letter that says, a person gave, $200 to this organization, and make sure that you have that letter when you do your taxes, and you need to keep it in case the IRS ever asks you for it, because they do. They ask for people to support their deduction. I had a very generous person who gave away a lot of money, and they had to come up with letters for all the places that they donated money to.
Okay. So with that, I would like to conclude the session for today. Thank you very much, Daryl, for taking your time on this busy, and again, as I said, holiday time. I know year end is approaching, Christmas time. It's definitely a holiday time for everyone. Again, once the January picks in, I know how busy you would be, and I'm sure you are busy too now. But thanks for accepting my invite, and you be here in a very short notice and spending time and sharing your knowledge and tips with our listeners and viewers. I sincerely appreciate
Enjoyed it.
Thank you very much.
Thank you for the opportunity. And you'll have my email. Please send me an email if you have a specific question or would like a consultation. I'd be happy to speak with people about their own business opportunities. So thank you so much for the opportunity.
Absolutely. Like, let's say if they're looking for, if the audience, if any audience is looking to establish a new business in 2021, or probably sustainably convert, it as a DBAs or any other thing. So definitely we would recommend, so to reach out to you directly, so that, you would provide the best advocacy or consultancy to them.
Happy to do it.
Yep.
Okay.
Thank you very much, Daryl. Thank you.
Thank you. Enjoy the opportunity. All right.